This trading week is going to end on a positive note. Investors are betting on a rapid and steady recovery of the global economy on the background of mass vaccination. Risk sentiment is gaining momentum amid market optimism. For this reason, the US dollar index has slowed to a 2.5-year low. Yesterday, it touched the level of 89.75. However, today it's correcting upwards as investors are locking in profits by closing short deals on the US currency. It's not surprising, as it usually happens almost every Friday. What's more, traders have taken notice of recent macroeconomic data. They were disappointed by yesterday's report on the number of people applying for jobless benefits in the United States. There were more unemployed Americans in the week before December 12 than expected. Besides, the negotiations in the Senate on the new stimulus package have stalled again. Some senators have tried to push through a new relief bill, which has slowed down the whole process. According to Senate Majority Leader Mitch McConnell, stimulus talks are now likely to be extended over the weekend. In Japan, deflationary pressure on the economy has suddenly increased. The consumer price index dropped by 0.9% year-on-year, which was much worse than the forecast value. Analysts had expected a 0.5% decline in consumer prices in November. The deterioration of the epidemiological situation in Japan has had an adverse impact on consumer spending. So the yen is correcting downwards after reaching a 9-month high today. The dollar-yen pairs lead to a bearish target of 103.18 as traders closed their long deals on the pair. As a result, it pulled back. Experts of technical analysis say that the market is now neutral. So, even after the correction, the pair is unlikely to resume the bullish movement up to the level of 104.10. In the current situation, it's better to refrain from active trading of this pair. The Australian dollar retreated from a 30-month high against the US dollar. Yesterday, the AUDUSD pair surged to the level of 0.7638. However, today, investors are closing most of their positions in order to gain profit before the weekend. They have also closed most of their deals following the news about the aggravation of trade relations between the United States and China. Donald Trump intends to add about 80 more Chinese tech companies to the blacklist. Technical analysis experts rejoice. They have long forecast the triple divergence, which signals reversal and downward movement. Besides, they have warned many times that the Aussie is overbought. Yet the Australian currency continued to move up stubbornly. So now they again forecast that if the pair declines under 0.76, it will be the first sign that the pair will go down, aiming for the level of 0.75. That's all for now. We wish you profitable deals. See you in our channel with a new video in a couple of hours.